Hi, this is Steve Davis over at Total Wealth Academy, and this is Learn the Lingo, a glossary for investors. The term I want to review today is the term speculation. And this one is confusing to people because most people are speculators, but they call what they do investing. And they're not really investors. Again, they're speculators. This mantra of the speculator is buy low, sell high. If you use that phrase, you're a speculator, not an investor. Speculation is gambling. You're gambling that the value of whatever you purchased is going to go up. This would be stocks, precious metals, crypto, and things like that. What you've got to understand is that an investment is different than speculation. An investment is going to have a characteristic that separates it from speculation. And that characteristic, as a rule, is a thing called cash flow. When I invest in real estate, do I want it to go up in value? Yes. Is it going to? Yes. Every 20 years, real estate doubles in value and has since 1776. But aren't there times when real estate goes down in value? Absolutely. In other words, the graph, let me put it on the board. The graph of real estate goes like this. But if you're wise, you actually see this. It's always going up, but it does have times when it comes down. The same holds true for the stock market, but the problem is stock market doesn't produce cash flow. When I buy an apartment complex, and let's say I'm making $10,000 a month in positive cash flow off of it, a market crash comes. My property value drops 40%. Guess what my cash flow is? 10 grand a month, the same as it was before the property value dropped. Are you starting to see the difference? When someone who holds stocks, metals, or crypto, when that value drops, they lost money. They may have to sell during that time period just to pay the bills, and they lose money. An investor doesn't, because an investor lives off of cash flow, not appreciation. A speculator lives off of appreciation. But the problem is, in the down times, for example, 2007, the Great Recession, if you were in the stock market and you turned 70 and wanted to retire in 2007, you were screwed. You couldn't. Your portfolio dropped 30, 40%. You're working at Walmart greeting people at the door. Investors kept making money. Again, if you'd owned an apartment complex that was worth $5 million and you were making 10 grand a month, that property value drops to 4 million, you're still making 10 grand a month. So speculation is totally different from investing. Now, can you speculate with real estate? Yes, but that's not investing. Speculation would be go out, buy a lot, build a house, and wait for somebody to buy it. That's speculation. You're saying, I'm going to put $300,000 into this build and hopefully sell it for $400,000. Buy low, sell high. That's speculation. That's why it's called a spec home, speculative. Flipping is also speculative. You're buying a home for $200,000, you're putting $50,000 in it, and you hope it sells for $300,000. That again is speculation, not investing. So it's not that real estate can't be used as a speculative tool. It's just, it's not investing. Investing is when you buy something that produces cash flow and you get the appreciation by default. You want to think of it like this. Cash flow is the cake. Appreciation is the icing on the cake. Whereas speculators, there is no cash flow. That makes appreciation the cake, And sometimes they don't get it. We get our cash flow through up and down markets. Be an investor, not a speculator. Thanks for watching.